It's KBKW, and it's Coffee Talk on a Wednesday, and you know what that means. It's time now for the Insider Report with Everett Hughes. Good morning, Everett.
Good morning, Doug. How you doing today?
I'm not doing bad. You know, your desk is always busy. You always end up with some interesting cases. Anything new?
Actually, the one I want to talk about today, it's new in that it's more specific than things I've seen before. But we've talked about who's liable for divorces. There's a divorce and who pays the tax. And there's sometimes when there'll be a divorce, and of course, the agreement is, well, he or she or whoever, somebody gets designated as having to pay the tax, or they say we'll split the tax. But now there's an interesting case where, now, unfortunately, this couple went down and they got their own do-it-yourself divorce kit.
Uh-oh.
And they wrote it up themselves. So who knows how it was really done. But they said, well, we agree that whoever's going to pay the tax, and I think he ended up agreeing to pay the tax, the income tax.
Mm-hmm.
Okay? Well, now the divorce is over. And now we find out that she had her own business, an LLC that he was not a member of, as we've discovered. So he has no interest in that business at all, nor liability for that matter. Well, here's what she did. Have a lot of this going on. 941s, well, that's the form you reported on. But when you have employees, you're withholding FICA Medicare, and they're withholding from them, and you're sending that stuff in to the federal government, you know.
Right.
Now, you're familiar with that.
Yes.
And if you don't pay that, that is considered, and that tax is considered a trust account tax, because it's not yours,
Mm-hmm.
it's not the employees. You're supposed to forward it to the government, and if you don't, they'll come out and they'll collect it from the person who didn't pay it. Whoever was responsible for forwarding that in, they're going to go after that individual.
Uh-huh.
Well, guess what? In this community property state of Washington, where everybody has decided how the taxes are going to be paid, and in the case of property, everything's 50-50, taxes, everything's 50-50, or whoever agreed to pay it. But what happened was, this client, she had ran up $58,000 worth of trust account taxes.
Oh, wow.
And now they're coming back to the table wanting him to pay this or split this. Well, here's the issue. Trust account taxes are not community property. Even in the state of Washington, the taxes are there. Somebody might say, well, no, you've got to split that tax because you agreed to pay half of the tax. Not if it's trust account tax. And the same thing is true in business if you haven't paid the sales tax. That's trust account tax also. And all of these trust account taxes are the legal responsibility of whoever incurred them.
So is she going to be the one then that will have to pay?
She's the one responsible. That's right. It's not to be split.
Mm-hmm.
It's not part of the he pays everything deal, because they're trust account taxes and they belong to whoever incurred them. In fact, they could even belong to the bookkeeper who had check signing authority and just never did it. They could even be put on that individual. That's not who they chase first, but it could be even that. But it's something that listener land should keep in mind, especially even in the middle of a divorce or some kind of a situation like this, or even in a business that's collapsed.
Wow.
The trust account taxes are the responsibility of whoever had control and didn't do it.
Gotcha. Well, we're out of time, but if you want some more information or set up an appointment with Everett Hughes, 533-4131, and check out that website.
EverettHughes.com.
All right, we'll talk to you next Wednesday.
Absolutely.